$64.6 billion. That's how much one man has now bet on a single company. SoftBank's Masayoshi Son just completed a $41 billion investment in OpenAI, bringing his total stake to roughly 13%. And that's not even the biggest part of the story.
Okay, I saw the headlines about the OpenAI deal, but $64.6 billion in a single company? That has to be one of the largest concentrated bets in corporate history, right?
It absolutely is. And here's what makes it extraordinary. On March 27, 2026, SoftBank secured a $40 billion bridge loan, unsecured, maturing in just 12 months, to fund this investment. Let me repeat that. A $40 billion unsecured loan with a one-year maturity. The repayment is essentially tied to a potential OpenAI IPO happening on schedule.
Wait, so if OpenAI doesn't go public in the next 12 months, SoftBank has to find $40 billion somewhere else?
That's the High Wire Act, and S&P has already responded. They shifted SoftBank's credit outlook from stable to negative, warning that OpenAI could represent 30% of the conglomerate's entire portfolio. The debt-to-equity ratio sits at 137.6%. This is not a conservative balance sheet by any standard.
But I think we need to zoom out here, because the OpenAI investment is just one piece of a much larger strategy. Son isn't just betting on OpenAI. He's trying to build an entire AI empire.
Exactly right. Let's map out the full picture. There are three pillars to what Son is calling his AI vision. Pillar 1 is OpenAI itself, the model layer. $64.6 billion invested, roughly 13% ownership in the company, with $20 billion in annual revenue run rate and 900 million weekly active ChatGPT users. OpenAI is the most valuable private company in the world.
Pillar 2 is Stargate. I was just reading the latest update this morning. OpenAI, Oracle, and SoftBank announced 5 new U.S. data center sites. The combined capacity is now nearly 7 gigawatts of planned infrastructure, with over $400 billion in investment committed over the next 3 years. Son is the chairman of the entire Stargate venture.
And the flagship campus in Abilene, Texas is already operational on Oracle Cloud infrastructure. Oracle is deploying over 450,000 NVIDIA GB200 GPUs there under a 15-year lease. The remaining 6 buildings at Abilene are expected to be completed by mid-2026. The 5 new sites span Texas, New Mexico, Ohio, and the Midwest. SoftBank has already broken ground in Lordstown, Ohio.
The scale is genuinely staggering. 1.2 gigawatts just for the Abilene campus alone. That's enough power for roughly 1 million homes. They're using high-density liquid-cooled racks, modular construction, diverse power sources, including renewables and on-site generation.
And then there's Pillar 3, which might be the most ambitious of all. Project Izanagi, named after the Japanese god of creation. This is SoftBank's $100 billion venture to build a vertically integrated AI semiconductor champion that could challenge NVIDIA itself.
Okay, that's the part that really gets my attention. Can you actually challenge NVIDIA with $100 billion?
Well, here's what we know. SoftBank owns approximately 90% of ARM holdings. ARM's chip architecture powers virtually every smartphone on the planet and is increasingly moving into data centers. The Izanagi project leverages that ARM IP to design custom AI processors. Prototype samples have been testing since summer 2025, and the first Izanagi AI chips are expected to ship in late 2026.
And ARM CEO Rene Haas has been appointed to oversee a significant portion of SoftBank's international operations, while maintaining his ARM leadership role. That tells you the integration between ARM and Izanagi is deep.
Very deep. Son isn't just investing in AI. He's trying to own the entire stack. The models through OpenAI, the infrastructure through Stargate, and the silicon through Izanagi. If it works, it would be the most vertically integrated AI platform on Earth.
So let's talk about why Son is going all in right now. What's the strategic logic behind concentrating this much capital in AI at this specific moment?
There's a theory of the case that Son has articulated publicly. He believes we're in the final approach to what he calls ASI, artificial superintelligence. He said repeatedly that within this decade, AI systems will surpass human intelligence across all domains. And his bet is that whoever controls the infrastructure layer, the compute, the chips, and the energy, will capture the majority of the economic value.
That reminds me of the Rockefeller analogy he used at the Davos speech. It's not about who drills for oil, it's about who owns the pipeline and the refinery.
Exactly. And if you look at the numbers, the AI infrastructure market supports that thesis. OpenAI and SoftBank jointly invested $1 billion in SB Energy as part of the Stargate build-out. Power is the bottleneck.
Every gigawatt of data center capacity needs a corresponding gigawatt of energy supply. SoftBank is positioning itself as the energy backbone of the AI revolution.
But here's where it gets complicated. SoftBank's Vision Fund history is a cautionary tale. The original Vision Fund raised $100 billion, invested in WeWork, Wirecard, Greensill, and a long list of companies that either went bankrupt or lost most of their value. The Saudi backing through PIF's $45 billion felt like unlimited capital at the time, until it wasn't.
That's the elephant in the room. Son's track record is spectacular when he's right. Yahoo Japan, Alibaba, Arm, and catastrophic when he's wrong. The Vision Fund lost roughly $30 billion at its low point. The question is whether this AI bet is more like his Alibaba investment in 1999, a visionary bet that pays off 1,000-fold, or more like WeWork, a conviction trade based on narrative rather than fundamentals.
Okay, but devil's advocate here. The structural differences are significant. WeWork was a real estate company pretending to be a tech company. OpenAI actually has $20 billion in annual revenue run rate and 900 million weekly users. Those are real numbers.
True, but profitability is a different story. OpenAI is not expected to be profitable until 2030. That's 4 more years of cash burn. And the compute costs for frontier AI models keep escalating. GPT-5's training run reportedly cost over $1 billion. Each generation gets more expensive, not less.
The ripple effects across Asia are worth discussing too. SoftBank is essentially routing a massive amount of capital from Japan into American AI infrastructure. The $400 billion Stargate commitment is almost entirely US-based. That's good for American jobs and energy infrastructure. But what does it mean for Japan's own AI ambitions?
That's a sharp observation. Japan just committed 1 trillion yen to its own national AI strategy, including backing Rapidus with 632 billion yen for chip manufacturing. But SoftBank's AI investment dwarfs the entire Japanese government's tech budget. Son is essentially saying that Japan's AI future runs through America, not through Japan.
And the geopolitical implications are real. Arm's 90% ownership by SoftBank means that a Japanese conglomerate controls the chip architecture that powers most of the world's mobile devices and an increasing share of data center AI. If US-Japan relations were ever to deteriorate, that becomes a pressure point.
Right. And the Stargate partnership puts SoftBank in a uniquely powerful position as a bridge between Silicon Valley's AI capabilities and global capital. Son is sitting at the intersection of American AI, Japanese corporate muscle, and Middle Eastern sovereign wealth money. He raised capital from multiple Gulf sovereign funds for the Vision Fund era, and there's no reason to think he won't tap that channel again.
Speaking of capital, let's talk about the $40 billion bridge loan, unsecured, 12-month maturity. That is an extremely aggressive financing structure for this scale of investment.
Contrarian corner. The consensus view is that Son is either a genius or insane, and there's nothing in between. I actually think the middle ground is more interesting and more likely.
Okay, what's your read?
Let me start with why the bears are wrong. The most common criticism is that SoftBank is overextended and that this is WeWork 2.0. But there's a fundamental structural difference. In the WeWork era, SoftBank was making dozens of bets across consumer internet companies with no coherent strategy. Today, every major investment, OpenAI, Stargate, Izanagi, Arm, they all connect into a single integrated stack. It's concentrated, yes, but it's not random.
And the market seems to be validating that. I read that Arm added over $50 billion to its valuation in just the past week, which directly strengthens SoftBank's balance sheet since they own 90%.
That's a critical point. As long as Arm's stock price holds, SoftBank's loan-to-value ratio stays below 25% and the balance sheet looks manageable. The company says it has enough cash to cover bond redemptions for the next 2 years. The danger scenario is a sustained Arm stock decline combined with the OpenAI IPO being delayed.
So what could go wrong? Walk me through the bear case.
The bear case has 3 components. First, the OpenAI IPO timing. If OpenAI doesn't go public within the next 12 months, SoftBank needs to refinance that $40 billion bridge loan. In a rising interest rate environment, with S&P already flagging negative credit outlook, that refinancing could be expensive or even difficult.
That's significant. Central banks are still tightening. The Bank of Japan just raised rates to 0.75%, and the market is pricing in more hikes. Borrowing costs for Japanese corporates are rising across the board.
Second risk is the Izanagi execution challenge. Building a semiconductor company from scratch, even with Arm's IP, is extraordinarily difficult. Intel spent decades and tens of billions trying to compete in mobile chips and failed. AMD spent 15 years fighting back from the brink against NVIDIA. The idea that Izanagi can ship competitive AI chips in late 2026 and meaningfully challenge NVIDIA's ecosystem by 2028 requires everything to go right.
And NVIDIA's CUDA moat is 20 years deep. We talked about this in our Huawei Ascend episode. Even with unlimited money, migrating the software ecosystem takes 5 to 10 years.
Exactly. Izanagi might produce good silicon, but good silicon without a mature software stack is like building a highway with no cars. The third risk is the macro environment. Son's strategy requires continued AI capital expenditure growth. If there's an AI spending slowdown, either from a recession or from companies questioning the ROI of massive AI investments, the entire premise weakens.
Here's what I find most fascinating, though. Even the contrarian case isn't entirely bearish, because Son has built optionality into the structure. If OpenAI succeeds and goes public at a valuation above $500 billion, SoftBank's 13% stake alone would be worth $65 billion, essentially paying back the entire cumulative investment. If Izanagi delivers competitive chips, ARM becomes the centerpiece of a semiconductor platform worth potentially more than NVIDIA in the long run. And Stargate, as physical infrastructure with 15-year lease commitments, generates steady returns regardless of which AI company is hot.
That's the key insight. Son isn't making one bet. He's making 3 interconnected bets where any one of them succeeding could justify the entire investment. It's a portfolio of moonshots that happen to be architecturally linked.
But the flip side is that all 3 bets share a common assumption, that AI demand continues to grow exponentially. If that assumption proves wrong, if we hit an AI winter or a major disillusionment cycle, all 3 pillars fall simultaneously.
Right. It's diversified within the AI thesis, but completely concentrated on the AI thesis itself. That's what makes it such a fascinating case study. Son is either positioning SoftBank as the Berkshire Hathaway of the AI era, or he's doubling down on the largest speculative bet in corporate history.
All right, let's get practical. What should investors and business people actually be watching? Action items.
Action item number 1. Watch the OpenAI IPO timeline obsessively. SoftBank's $40 billion bridge loan matures in March 2027. If OpenAI files for an IPO by late 2026, that's the green light for SoftBank to refinance on favorable terms or use IPO proceeds to pay down the loan. If the IPO slips to 2028 or beyond, SoftBank faces a refinancing crunch that could force asset sales, potentially including some of its ARM stake. The S-1 filing date is the single most important data point for anyone with SoftBank exposure.
That's a very clear signal to track. What's number 2?
Number 2. Track ARM's earnings and revenue diversification. Right now, ARM generates the majority of its revenue from smartphone chip licensing. The AI upside, data center ARM chips, Izanagi integration, that's all future potential. If ARM's quarterly earnings show meaningful traction in data center revenue, that validates the entire thesis. If data center revenue stalls while smartphone licensing plateaus, ARM's valuation becomes vulnerable, and with it, SoftBank's balance sheet.
I'd add that NVIDIA's earnings calls are equally important here. NVIDIA's commentary on competitive threats and ARM-based AI chip adoption gives you a read on whether Izanagi's premise is realistic.
Great point. And action item number 3 is broader but critical. Watch the global AI CapEx cycle. Right now, hyperscalers, Microsoft, Google, Amazon, Meta, are spending combined over $300 billion per year on AI infrastructure. Stargate's $400 billion commitment over 3 years assumes that spending level continues or accelerates. The first signal of a pullback, whether from disappointing enterprise AI adoption or a macro recession, would directly threaten the Stargate build-out timeline and SoftBank's infrastructure returns.
The Abilene campus, with its 450,000 GB200 GPUs under a 15-year Oracle lease, is relatively safe. It's the 5 new sites that are still in early stages. If CapEx sentiment shifts, those later sites could be delayed or downsized.
Exactly. The risk is front-loaded on the newer commitments, not on what's already built.
The big picture takeaway here is that Masayoshi Son is attempting something no one has ever tried in the history of technology, building a vertically integrated AI platform from silicon to infrastructure to models, spanning 3 continents and representing over $500 billion in committed capital. Whether that makes him the most visionary CEO alive or the most reckless depends entirely on whether AI demand compounds at the rate he's projecting.
And the fascinating part is that we'll know within about 18 months. The OpenAI IPO, the Izanagi chip shipments, and the Stargate expansion, they all converge in the 2026 to 2027 window. This isn't a bet where you wait a decade for the answer. The verdict is coming fast.
Coming up next, we'll be exploring the global rare earth supply chain and how China's 98% stranglehold on processing is creating a new Cold War over critical minerals, from gallium to germanium to graphite.
That one's going to be a critical listen, especially with the Middle East situation reshuffling energy supply chains.
And if you want the written version with all the data and sources, we publish a free daily newsletter at asiatechmacro.substack.com. Today's piece has the full breakdown of SoftBank's capital structure, the Stargate sitemap, and the Izanagi timeline.
Always worth a read. All right, that's it for today. Stay data-driven. Bye.